Today, we will talk about the advantages or benefits of investing in personal equity and retirement account or PERA. This is my third video on PERA. If you would like to watch the first one, which is the introduction, or the second one in which I detail the parties involved, such as the contributor, administrator, custodian, and investment manager, please look for the links in the description box. Before we get into the advantages, I want to give a brief explanation about taxes as this is very important in what we are going to talk about. For those unfamiliar with taxes, they are simply money collected by the government to support the country. You must pay tax if you earn money, whether as an employee or a business owner. You must also pay tax if you buy something from a store, and you must pay tax if you sell your investments, such as stocks or investment properties. There are many types of taxes. They will depend on where the money comes from. Employees pay income tax on their salary. Those who sell investments like stocks pay capital gains tax if they earn. And those who receive the investments of those who died will pay estate tax. Other taxes apply and the amount or percentage charged varies. And depending on the size of your assets, the tax might be quite large to the point where it has a significant impact on the value of your investments. To improve our economy, we must support our country. Our taxes go towards running our healthcare and education system, building public infrastructure, and funding the military to keep us secure, among others. There are taxes involved with practically everything we do. That's the way it works. In a sense, taxes are your payment for residing or investing in the country. I hope that explains taxes in layman's terms. So now, what do you get when you invest in PERA? The first advantage is there is a 5% income tax credit on the actual PERA contribution. A 5% income tax credit is available. So the tax credit is the monetary amount that can be used to offset a tax liability. This means that if you make a contribution to your PERA, 5% of that payment will be deducted from your tax liability, thereby lowering it. For overseas Filipinos, the 5% tax credit can be claimed against any internal revenue tax liabilities in the Philippines. The second advantage is your investment income is tax-free. Yes, you heard it right. Investment income is tax-free for all income earned from investments and reinvestments. Reinvestments meaning you're putting back your earnings or profits to your investment so that it will grow further. Tax-free for all contributions that are within the limit, which is currently 100,000 per year, but may increase in the future depending on the inflation or the consumer price index or as dictated by the government. Remember that all earnings from your PERA will be tax-free when you retire. That is to say, all your money will be yours. The Philippine government is expected to lose 10 billion pesos each year as a result of PERA's tax benefit. As I said earlier, the government is dependent on taxes, and the presence of PERA is counterproductive as the tax benefits offered by PERA will result in the government receiving less revenue or taxes. Members will pay less tax. Despite this, they came to the conclusion that the benefits outweigh the revenue loss for the following reasons. People will be motivated to save more because they will have access to a platform where they can invest. The government predicts that a large number of Filipinos would soon be financially self-sufficient or financially independent. PERA will pave the way for you to retire comfortably and worry-free. The next reason is the government expects that as more people invest in PERA products, more tax revenue will be generated. This is because businesses are incentivized or encouraged to list on the stock market. The government will profit handsomely from the initial public offering tax. So when the company goes public, they also pay tax. We're talking about tax revenue in the hundreds of millions of pesos. The next advantage is your PERA assets will not be considered your assets for purpose of insolvency and estate taxes. This means PERA assets will not be used to pay your creditors if your business becomes insolvent or you are unable to pay your debts. Your estate or the person who inherits your money will not pay any tax on your PERA assets when you die. This means that your PERA assets will only be used for your retirement. The next advantage is your withdrawals will be restricted. This could be an advantage and a disadvantage. On the bright side, PERA's tax-free status will motivate you to save more because whatever you contribute, including earnings, will be yours at the end of the day. You will be cautious when accessing your funds because you will lose the tax-free benefit. That is it for the advantages. Hope you learned something. I will discuss the disadvantages in my next video. Thank you for watching.